Hello everyone, welcome back to Coin Engine. Today we'll discuss the recent events that have caused a surge in Bitcoin's price. On March 10, Silicon Valley Bank, SVB, failed, and since then, the price of Bitcoin has been on a tear. In just 24 hours, Bitcoin's value went up by 35%, which is quite significant. So what happened? And what is the reason behind this increase in Bitcoin's price? Let's find out in this video. What happened to lead to this increase in Bitcoin's price? Bitcoin was trading around $19,600 in the early hours of March 10. It whipsawed just above and below $20,000 until around noon ET, when it was announced that SVB was going into FDIC receivership. At that point, Bitcoin shed $200 to dip below $20,000, jumped a bit, and spent most of the weekend trading above $20,000. By Monday, March 13, at 9:30 a.m. ET, it was trading at $22,386. And then the fun began. Just 24 hours later, Bitcoin was trading at $26,175. At one point, even touching up against $26,500. As of publication, it is currently sitting at around $26,700. The impact of bank failures on Bitcoin's price. As we have previously mentioned in our videos, narrative matters a lot regarding the price of assets. Federal Reserve Chair Jerome Powell has also stated that people's expectations of inflation have a real effect on inflation. Given Bitcoin's history, the bank failure adjacency is obvious here. At least 3 banks have failed, and others, American and non-American, are failing. Because it's not because of Bitcoin that's good for Bitcoin's price. It isn't clear who is at fault for the 3 bank failures, because who even knows if these banks are failing due to insolvency? SVB failed due to an old-fashioned bank run that was spurred on due to apparent weaknesses on its balance sheet because of poor duration risk management. And yes, Silvergate was running into some issues and had to take an FHLB loan, but its eventual winding down was reportedly voluntary. And then we have Signature Bank, where even the regulators can't determine if the bank was shut down because of crypto or a crisis of confidence in leadership. Let's add the fact that there are wider risks to the broader banking system. Credit Suisse (CS) just received a 50 billion Swiss franc loan from the Swiss Central Bank, and 11 banks just injected $30 billion into California-based regional bank First Republic Bank (FRC) to save it. On the former, it is telling that the central bank wants to save Credit Suisse. On the latter, it is even more telling that banks want to save a competitor for fear of contagion. Otherwise, why wouldn't they just let a competitor fail? We know one thing that isn't causing these banks to fail. These banks aren't in trouble because of bets on Bitcoin, crypto, or the companies in those industries. What appears to be happening is the fractional reserve banking system is under stress due to rising interest rates, and it's showing cracks. And so the narrative goes, as the banks fail, opt out and buy Bitcoin. That narrative is strong enough to propel the price. Stablecoins were unstable. With the failure of Signature Bank, we saw US dollar stablecoin USD coin, USDC, lose its dollar peg last weekend. USDC regained its peg during the week, but the loss of peg raised questions about the stability and reliability of stablecoins. Stablecoins are designed to maintain a stable value relative to a specific asset or basket of assets, such as the US dollar, euro, or gold. This stability makes them appealing to investors and traders looking to avoid the volatility of cryptocurrencies like Bitcoin and Ethereum. However, the recent incident with USDC highlights the fact that stablecoins are not entirely immune to price fluctuations and other risks. While stablecoins are typically backed by reserves of the underlying asset they are pegged to, these reserves may not always be sufficient to support the stablecoin's value during times of market stress or unexpected events. The recent bank failures and instability of stablecoins have contributed to Bitcoin's recent surge in price. As more and more banks fail or face financial stress, investors are turning to Bitcoin as a safe haven asset with no counterparty risk. Additionally, the potential suspension of interest rate hikes by the US Federal Reserve could provide a much-needed break for the market. As the crypto industry continues to evolve, it's important to stay informed and up-to-date on the latest developments. Will Bitcoin continue to be the clear winner in the aftermath of SVB's fall? Only time will tell. But one thing is for sure, the narrative surrounding Bitcoin and its role as a store of value continues to strengthen. So whether you're a seasoned crypto investor or just starting to dip your toes into the world of cryptocurrency, make sure to stay tuned to CoinEngine for more insights and analysis on the latest crypto trends and developments. And as always, keep your eyes on the market and invest wisely.